Welcome to Investing for Beginners, Building a Profitable Stock Portfolio. Whether you're new to investing or already have some experience, this video is designed to help you understand the key principles and strategies for building a profitable stock portfolio. By the end of this video, you'll have the knowledge and confidence to make informed investment decisions. Let's get started. Understanding the stock market. What is the stock market? The stock market, also known as the equity market, is where buyers and sellers trade shares of publicly listed companies. It is a platform that facilitates the buying and selling of stocks, allowing investors to participate in the growth and success of various companies. Why invest in the stock market? Investing in the stock market can offer a range of benefits, such as long-term capital appreciation, dividend income, and the opportunity to become a part owner of successful companies. However, it's important to note that stock market investments come with risks, and it's crucial to approach investing with a long-term mindset. How does the stock market work? The stock market operates through stock exchanges, where buyers and sellers place orders to buy or sell shares. These orders are matched electronically, and the price at which a buyer is willing to buy and a seller is willing to sell determines the stock's value. Stock prices are influenced by various factors such as performance, market trends, and economic conditions. Selecting the right stocks. Fundamental analysis. Fundamental analysis involves assessing a company's financial health, performance, and competitive strength to determine its intrinsic value. Factors like revenue, earnings, debt levels, and management quality are analyzed to evaluate a company's potential for long-term growth. Technical analysis. Technical analysis involves studying historical price and volume data to predict future stock price movements. Chart patterns, trend lines, and indicators are used to identify potential buying or selling opportunities. While technical analysis can complement fundamental analysis, it's important to recognize that technical indicators are not always accurate predictors of stock prices. Consideration of risk and return. Before investing in a stock, it's crucial to evaluate the risk and return potential. Higher risk stocks may offer greater returns but also come with increased volatility. Conservative investors may prefer stocks with more stable performance and lower risks. Balancing risk and return based on your investment goals and risk tolerance is vital. Diversifying your portfolio. What is portfolio diversification? Portfolio diversification means spreading your investments across different asset classes, sectors, industries, and geographic regions. By diversifying, you reduce the potential impact of a single investment's performance on your overall portfolio. Diversification can help manage risk and increase the likelihood of consistent returns. Diversification strategies. There are various diversification strategies to consider, such as investing in different industries, company sizes, regions, or even asset classes like bonds and commodities. Each strategy has its own benefits, and finding the right balance will depend on your risk tolerance, investment objectives, and time horizon. Benefits of diversification. Diversification can help protect your portfolio from the negative impact of a single stock or sector's poor performance. It allows you to participate in the potential growth of different areas of the market while mitigating risk. Remember, diversification does not guarantee profits or protect against losses, but it can improve the risk-reward ratio in your portfolio. Managing investment risks. Types of investment risks. Investment risks can include market risk, liquidity risk, inflation risk, credit risk, and more. It's essential to understand and assess the potential risks associated with your investments. By identifying and managing these risks effectively, you can better protect your portfolio and reduce the chances of significant losses. Risk management strategies. Risk management involves techniques to control or mitigate potential losses. Strategies like setting stop-loss orders, diversifying investments, monitoring the market, and staying informed can help you manage risks effectively. Additionally, regularly reviewing and rebalancing your portfolio is crucial to adapt to changing market conditions. Seeking professional advice. If you're unsure about managing investment risks or finding suitable investment opportunities, seeking professional advice from a financial advisor or broker can be valuable. They can help assess your risk tolerance, provide personalized investment guidance, and offer insights to navigate the complexities of the stock market. Congratulations! You have now gained important insights into investing for beginners and building a profitable stock portfolio. Remember, investing in the stock market requires patience, knowledge, and a long-term approach. By understanding the stock market, selecting the right stocks, diversifying your portfolio, and managing investment risks effectively, you're well on your way to increasing your chances of building a profitable stock portfolio. We hope you found this video informative and helpful. If you enjoyed it, give it a thumbs up and share it with others who may benefit from this knowledge. Subscribe to our channel for more investing tips and tricks. Thank you for watching.